a.m. in New York City, 10 a.m. in London. Good morning. I'm Bonnie Quinn with your Bloomberg brief. Let's get you set up for the day. TSMC's AI optimism. The chipmaker raises spending and boosts its revenue outlook. Meantime, market caution prevails as traders weigh earnings and the strength of the AI trade. And the US completes its latest airstrikes on Iran with tensions showing no sign of easing. Meantime, globally, Korea implementing some market stability measures. Let's get all the color from the Asia session now with Winnie Su in Hong Kong. Winnie.
Yeah, good morning, Bonnie. We are seeing Korean stocks leading declines in Asia today in expectation to authorities tightening those rules around ETFs. Now, you just mentioned we had the announcement about an hour ago with South Korea saying that they are temporarily halting the new listing of these single stock leveraged ETFs until market conditions stabilize. Now, they are also going to be raising the minimum deposit requirements for these investments and expecting the implementation to start in a few weeks. So that is likely going to restrict some of the accessibility, especially for retail investors, and hopefully tame these volatility that we see in the South Korean market. Now, when it comes to the central bank moves, we did see that Bank of Korea raising rates for the first time in over 3 years, and that is helping to strengthen the Korean won here by almost 0.5%. Now, you flip the board and take a look at the broader Asian market, dragged down by technology shares, but the bright spot is actually in technology shares in Hong Kong. In fact, we did hear from Apple finally after 2 years of waiting to get that approval from China for its Apple Intelligence, the AI feature that it's working on with Baidu, and that is also helping the shares of Baidu, on top of how we just heard that they are pursuing a dual primary listing on the NASDAQ and in Hong Kong.
Winnie, lots going on in Asia. Thank you so much, Winnie Su there in Hong Kong. Now to London, where markets are evaluating a potential new Chancellor, among other things. Justina Lee has the details from the Europe session. Justina.
That's right, Bonnie. But before we get to that UK political headline, a quick update on European markets today. The Stocks Group 600 down a little bit, dragged down by utilities and financial services. In terms of bonds, generally yields are up, but I want to draw special attention kind of to the UK move, because as you alluded to earlier, we got a big news story out of the UK yesterday. Now today, the UK bond yield are up quite a bit, 4 basis points for the 10-year. And that's retracing some of the moves we saw yesterday after the FT reported that the incoming new Prime Minister Andy Burnham has picked the Home Secretary Shabana Mahmood to be the new Chancellor to head the UK Treasury. And that's generally seen as quite a market-friendly move, because she's seen as a little bit more fiscally conservative, a little bit more centrist, maybe compared to the other candidates that markets were afraid of. And so a little bit of reversal today with the pound also depreciating. But if we flip the board here, we can see the big market move that we saw yesterday afternoon after this news headline came out, with the pound rising to the strongest in almost 3 months. And that's on the back of that news, with markets maybe breathing a sigh of relief there, Bonnie.
Absolutely. Justina, thank you so much. Well, here in the United States, as you can see, we look to be a little red going into the open in just a few hours' time. So we got obviously benign data on inflation the last 2 days, but this rotation from semis into hyperscalers and back into semis, it's just going on and on day after day, and there doesn't seem to be any rhyme or reason to it, because every piece of news that we've got from the major companies across Asia and in the United States on AI has been great. They've been upping their visibility, they've been telling us more about what's to come in the future, and yet the market just doesn't seem to be able to make up its mind. We have the VIX pretty muted, the VXN, which is the measure for the NASDAQ 100, that's also pretty muted. And then, of course, you have what's going on in the Middle East, which does seem to be escalating, and that's not impacting things too much either. So for now, we have just a little bit of a down picture for equities. Let's move to yields, where obviously we had a little bit of relief. We have the 2-year back down to below 416. The 30-year, though, still up there at 510 and change. So a little bit less relief perhaps at the long end than at the short end. And then oil prices, they're holding steady, even though we are seeing those skirmishes just up a little bit in temperature, and it does bear watching what actually happens in the Strait of Hormuz. All right, let's get some individual market movers now. Back over to London and Chloe Melly.
Good morning, Vonnie. We're seeing this as a sign of additional strain on this AI trade this morning. TSMC came out with some very strong numbers and raised its outlook for both spending and sales. But we are seeing some weakness in those ADRs this morning, down more than 3%, really indicating those persistent concerns from investors. Moving on to United Airlines, which is also in the red this morning after actually raising its outlook, but that outlook disappointing investors. And there's also the concerns around those rising fuel prices, which is, of course, a really major headwind for the entirety of that sector. And this seems to be what investors are really focused on this morning. And we're down more than 2% there. And finally, let's go over to Atay Beckley, a psychedelic drug maker, which is soaring this morning on the news that Eli Lilly is in talks to acquire the company. This really shows that this kind of fringe area of medicine is attracting more and more interest from those traditional pharmaceutical players. And so we're up more than 50% this morning for this company.
Chloe, thank you so much. Chloe Melly there in London. She'll be back later in the hour. And also coming up this hour is Sitara Sundar of JPMorgan Private Bank. As we wrap up Wall Street earnings, we'll also be speaking with Saul Martinez of HSBC. He joined us earlier in the week. We'll get his thoughts post-earnings. Let's kick things off now, though, with TSMC's strong outlook. Bloomberg intelligence analyst Matt Bloxham joins us now. Matt, once again, it doesn't seem to matter what these companies are telling us. We are seeing this rotation between semis and hyperscalers. What is the reason behind this rotation that's happening day after day, and it's yo-yoing?
Yeah, I mean, I think the market's still trying to kind of figure out the best way to kind of play the AI story and just kind of seek out those kind of underappreciated parts of the value chain. But obviously TMC is kind of really central to all of this, being the primary provider of chips to the likes of NVIDIA. And obviously I think what we're seeing in the numbers today, raising their annual growth guidance in US dollar terms to more than 40%. The market was looking for about 35, 36%. Just shows you that the market's still kind of trying to adjust to how those big capex plans by the hyperscalers, spending over $700 billion this year, how that flows through to the rest of the value chain. And I think certainly today, we heard optimism from TSMC about the durability of that demand over the next 2 or 3 years, pointing to sustained high capex from them as they try to catch up on the capacity they need to provide to deliver against that demand.
Yeah, so forecasting 2026 sales to go by more than 40% in US dollar terms. It's a gross margin of 67.7%. All the key metrics beat. It's going to up its cash dividend. Is there any crack in this story?
I think right now, no, but I think if there is going to be a crack, it remains this kind of theme around the sustainability of enterprise demand. Obviously, a lot of people right now focused on this concept of token maxing. The tokens are the kind of the building blocks of AI consumption, and a lot of enterprises are realizing that they're burning through their budgets quicker than they thought and having to figure out, do we just continue to spend more, or do we manage how we interact with the AI platforms? And obviously it's the latter, then that starts to put a bit of a brake on the revenue growth we've seen, and that may kind of take the shine of some of these capital spending plans. And so obviously if corporates do try to kind of weave their way through this in a more cautious budgetary way, then that could slow the pace at which the capacity expansion happens and inevitably lead to a kind of further down the line more muted expectations for growth across the entire value chain, starting with the hyperscalers and feeding all the way down through to the chip providers.
Well, that's just it, Matt. I mean, does it make sense that there's this bifurcation or even trifurcation, I suppose, in the AI trade? Isn't it just one trade? If AI is, taking over, then it's good for all of these companies, no matter where they are in the chain?
To a degree, but I think what we've seen is investors rushing into certain parts of the value chain. That trade gets kind of overcooked, if you like, and then they move on. So I think if AI demand continues, then every part of the value chain should benefit. But the incremental question is, to what extent is the market already appreciating that, or perhaps over appreciating that? And so I think that's what you're kind of seeing right now, is investors trying to kind of figure out where the value opportunity is, and where perhaps they need to kind of rotate out of to kind of continue to kind of deliver good alpha really for their investors.
Slightly different subject, but we do have Netflix reporting earnings after the close, and I think we haven't got any AI characters on Netflix yet, as we know. But curious about engagement. Has it seen a floor, do you think, Matt, for engagement?
It's the big question. I think people are hoping that the answer to that's going to be yes when they report later, and obviously that the engagement figures, what we watched is going to be hugely in focus. I think the market's looking for about 14% sales growth. They've obviously been looking at a lot of different parts of the strategy recently, including M&A, including broadening their own lineup of content. Netflix was once a disruptor, and arguably other platforms are starting to disrupt Netflix, and they're having to respond to that. And so I think that those engagement figures are going to be very, very closely watched. And that's going to be the real kind of key metric that people latch onto in terms of where the stock goes from here. It's been under a huge amount of pressure over the last 12 months, and they do definitely need to deliver a convincing story when they report. Expectations are super high, I think, in terms of how they communicate what they're doing on content, and that they recognize what's going on, and they've got the right strategy to get that engagement level back up.
Yeah, absolutely. Matt, thank you so much. Matt Bloxham of Bloomberg Intelligence. And catch Bloomberg's interview with TSMC CFO Wendell Huang. That's Sunday at 7 p.m. New York time. The US has completed another round of attacks on Iran in an effort to secure shipping through the Strait of Hormuz, or at least that's the stated aim. Paul Wallace, Bloomberg managing editor for the Middle East and Africa, joins us for the details. Much further into the Persian Gulf, right by Carg Island, Paul, was this latest strike on a supertanker. Who's actually transiting the Strait at the moment? Is anybody?
Hi, Vonnie. The numbers of ships going through the Strait have dwindled a lot since early last week, when the most recent bout of tensions really escalated, and we're seeing very few ships going through openly with, let's say, transponders on. The US is saying it's still assisting some vessels going through at night, and it said that last night something in the order of 10 or slightly more ships got through with its assistance. Whether that was a full-on military escort or something slightly less is unclear. But the point is, numbers have dropped big time, and we're not at zero, but we're kind of back to where we were at the height of the war, in terms of traffic through Hormuz, and that, if this continues for a while, is almost undoubtedly going to put renewed pressure on oil and gas prices.
I do want to point out the US Navy has said that it will allow shipments of bulk food, medical supplies and other goods necessary for Iran's civilian population. It won't stop those, and it will let them through the blockade. How is Iran responding to this latest round? I mean, I know that they're targeting Jordan, Kuwait, Bahrain, but what else is Iran doing?
So it is picking up its attack, or stepping up its attacks on ships. That's for sure. Those going through Hormuz. The Strait is what the war is very much centered on right now, and talks between the US and Iran over Iran's nuclear program and a permanent peace deal, they've pretty much completely stalled, and everything is now focused on Hormuz. So beyond those shipping attacks by Iran, it is, as you mentioned, picking up its attacks on the likes of Jordan and Bahrain and Kuwait. And it's hard to see either the US or Iran budging on the Strait. Both sides are accusing the other of breaching the terms of last month's interim peace deal. Iran says that deal gave it the right to effectively decide on how traffic through the Strait should be managed. The US says no, that's not the case, that free passage of ships was pretty much guaranteed by the so-called memorandum of understanding. So until the sides move beyond that and resolve this issue of the Strait, it's very hard to see how we can get progress towards a permanent peace deal. All
right, Paul, thank you so much. Bloomberg's Paul Wallace there for us in Dubai. Now to other top stories trending on the terminal this morning. Uber has agreed to buy German food delivery company Delivery Hero at a valuation of almost $15 billion. The deal marks a sizable expansion in Asia, Latin America and the Middle East for Uber. The transaction is pending regulatory approval. Extreme weather hits the U.S. In New York City and across the Midwest, wildfire smoke from Canada is degrading air quality and turning the sun into a hazy, yellowish orb. Air quality alerts are in effect across portions of the Midwest and Northeast, with people with heart disease, asthma and other respiratory conditions most at risk. Argentina defeats England 2-1 to advance to its second straight FIFA World Cup final. England was able to stop Argentine star Lionel Messi from scoring, but he was still able to earn 2 assists. Argentina will face Spain at 3 p.m. New York time in New Jersey on Sunday. Coming up, U.S. Trade Representative Jamieson Greer says China's compliance on the trade deal is not perfect. More of that exclusive interview next. This is Bloomberg. This is Bloomberg Brief. I'm Vonnie Quinn in New York. U.S. Trade Representative Jamieson Greer says stable trade ties with China remains a top priority. He spoke with Bloomberg's David Gura from the Aspen Security Forum.
So China's compliance with the rare earth elements of our agreements, it's not perfect. I think everyone knows that. You can read that in the paper. That being said, we are getting a flow of rare earths. We don't have factories shutting down because they don't have it. But again, we really want to be in a position where we were, in 2024 and 2023 in President Trump's first term, where we had a regular flow of rare earths. We also know that the Chinese, they use rare earths for economic coercion. They did it in 2010 and 2011. They're doing it now, so it's not necessarily surprising. But we're continuing to to have some flow, and where we have gaps, where we have problems, the Secretary of the Treasury and I, we work with our counterpart in China to try to loosen that flow up. Sometimes we're more successful than others. One important thing is we're moving forward in the U.S. on rare earth production. One of the things I'm doing on my trip out west here, I'm going to Utah to visit a facility where they've discovered rare earths in the Utah desert, and they're refining them and further manufacturing them at a facility in Utah, which is a great development for U.S. national and economic security.
You've got rare earths. There's huge pharmaceutical dependence as well. And I wonder how you're thinking about that, the way that you can kind of curb our reliance on Chinese pharmaceuticals and ingredients.
Yeah, we think about this a lot. This is really critical, because at the end of the day, if somehow you lose access to Chinese inputs, it can be a huge challenge for our own manufacturing base. And some people will say, well, what about India? Fine, but a lot of the inputs that India uses also come from China. One great thing that we're seeing as we try to encourage companies to reshore is we actually have commitments from 17 pharmaceutical companies, the largest and the most major pharmaceutical companies, not only to lower prices of medication here in the U.S. Pharmaceutical prices have gone down by 2.5%, but they've also agreed to reshore here and to manufacture here. And so we have companies like Eli Lilly and Novartis and others actually pouring concrete and superstructures going up in new facilities in North Carolina and Indiana and Southern California.
There's a long way to go until this meeting in September when the Chinese president comes to the United States. But let me ask you lastly, sort of how you're thinking about that. You were so integral to the conversations that took place in Beijing. What are you expecting, deliverables-wise, to come out of that meeting in Washington in a couple months?
Well, the number one deliverable we always have between President Trump and President Xi is to continue the stability of the relationship. Both of these leaders are very committed to having a strong and solid personal relationship. Now, that doesn't mean we don't have issues in the broader relationship. Obviously, we do. China is a big challenge for the U.S. in a lot of ways, but we want to make sure we're delivering stability. There's never been a situation where the U.S. side or even the Chinese side has gone out and said everyone should expect a comprehensive agreement that resolves all issues. Like, no one's ever promised that, so that's not what we expect. We will have an opportunity to take stock of Chinese commitments with respect to purchases of soybeans and other agricultural products. We'll take stock on the rare earth issues we decided. So I think it'll be a moment for stock taking, confirming the relationship, making sure that China's complying with what it's agreed to do. That's really what we're looking forward to in this meeting.
That was U.S. Trade Representative Jamieson Greer speaking with Bloomberg's David Gura in an exclusive interview. This is Bloomberg. Time now for your front page news. First up, the New York Times reporting on a House vote yesterday rejecting a measure to eliminate U.S. aid to Israel. Almost half of Democrats supported the move to end aid. Vote notable, says the Times, because it exposes a stark shift in the Democratic Party away from backing the Jewish state. Next up, the Washington Post on acting Attorney General Todd Blanche telling the Senate Judiciary Committee he's not Trump's yes man. With Democrats united against Blanche, even one Republican committee vote against him would be enough to sink the nomination. And finally, the Financial Times reporting British Home Secretary Shabana Mahmood is set to become Britain's next Chancellor. Sources telling the FT the original frontrunner for the role, Ed Miliband, is now likely to become Foreign Secretary. A spokeswoman for Andy Burnham said cabinet roles will only be assigned Monday after Burnham becomes Prime Minister. Coming up, we're going to speak with Sitara Sundar of JPMorgan Private Bank. It's 5:30 a.m. in New York City, 10:30 a.m. in London. Good morning, I'm Bonnie Quinn with your Bloomberg brief. Let's get you set up for the day. TSMC's AI optimism. The chipmaker raises spending and boosts its revenue outlook. Meantime, market caution prevails as traders weigh earnings and the strength of the AI trade. And the US completes its latest airstrikes on Iran, with tensions showing no sign of easing. Let's take a look at markets as we're shaping up a few hours before the open. So very fractionally lower on futures. We have obviously had better news on inflation, but instability in the Middle East and really in the chip sector worsening the intermediate term outlook and the immediate term outlook potentially. We did have the S&P up 4% yesterday, the Nasdaq 100 down 0.3%, but that sort of masks all the volatility within the session. It's a pretty strange market because we have a muted VIX, a muted VXN, and yet so much uncertainty and a lot of optimism as well. Very strange. Let's take a look at yields. Obviously, after 2 days of Kevin Warsh's testimony, not too much has changed. We know a little bit more about how he thinks, but it hasn't really changed the narrative. It was more the CPI data that did that. We're back down to 4.15 on the 2-year yield. I guess it could be lower, but we did have that bear steepening move. The 30-year yield at 5.10 and change. And then oil holding at yesterday's levels. WTI is just below $80 a barrel now, and Brent is still firmly above $80. Let's get to some individual movers now with Chloe Melee in London.
Good morning, Bonnie. We are seeing some weakness in TSMC this morning, with the ADRs down more than 3% this morning, despite what look like very strong numbers from TSMC, as well as a raised outlook for both spending and sales, as you mentioned. But this seems to show this kind of growing strain on the AI trade and those concerns, those growing investor concerns around those lofty valuations and the sustainability of this AI spending as well. So a bit of weakness there. We're also seeing some weakness in United Airlines, despite a raised outlook, but the outlook has apparently disappointed, underwhelmed investors a little bit. And of course, we have got also the concerns around those rising fuel prices, which are weighing on the entirety of the airline industry. And this seems to be what investors are really focused on this morning. So we're down more than 2%. And finally, let's go over to Atai Beckley, a psychedelic drug maker, which is soaring this morning. We're up almost 60% after news that Eli Lilly is in talks to acquire this company. So it seems that this quite fringe area of medicine is moving into the mainstream, and we are seeing a huge jump in the shares this morning.
They're pretty high, wouldn't you say, Chloe? Thank you so much, Chloe Melee there. Let's take a closer look now at TSMC's strong outlook. Bloomberg intelligence analyst Matt Bloxham joins us now. So Matt, really nothing disappointing in TSMC's earnings that I could see. Key metrics all beat, margins were healthy, they're going to spend more in Arizona, and it's really just all golden. So why would investors sell this stock or these ADRs?
Yeah, I think it's just largely, the market already being ahead, perhaps even of where the company has announced things. And, they definitely beat on revenue guidance, 40% plus US dollar growth this year. The market was looking for about 35% or so. I think everything we've been hearing recently is that the demand for chips is enduring. And so to some degree, I think perhaps the whisper numbers were already there. And we're not seeing that kind of next incremental leg of capital spending commitment from the big hyperscalers yet. perhaps it will come, but the market already almost close to doubled its spending plans for this year, over $700 billion for the US hyperscalers, and the market's already expecting that to go to $900 billion or more next year. So I think there's already quite lofty expectations for demand growth, and I think that these numbers really just kind of confirm that rather than taking it to a really substantial next level.
Matt, we were waiting for South Korea to do something about the massive, crazy swings that we've been seeing in that market. The regulators came out today. They're halting new listings of single-stock leveraged ETFs. They're also raising the minimum deposit requirement for leveraged ETF trading and so on. Korea obviously on a holiday tomorrow, but will this implementation really do anything for the stability of the Kospi?
It's a good question. I guess the answer is we'll have to wait and see, but I think it's encouraging that they've actually acted to do something. Yeah, I think we spoke a few days ago about similar things in the past where, for example, short selling was banned in some markets. I think clearly these leverage ETFs have had an outsized and disproportionate effect on share price moves and kind of really perhaps masking the underlying fundamentals that you'd usually expect to drive a share price. So I think, hopefully this will start to kind of bring in that volatility, and really the share price moves will reflect more the fundamentals. But I think we're going to have to wait and see whether they're enough or not.
All right, Matt, thank you so much for all of your help explaining things every morning for us. That's Matt Bloxham of Bloomberg Intelligence. Do catch Bloomberg's interview with TSMC CFO Wendell Huang. That's on Sunday at 7 p.m. New York time. That's 7 a.m. Monday, Hong Kong time. Joining us now is Sitara Sundar, head of alternative investment strategy at JPMorgan Private Bank. Sitara, we're seeing investors be very discerning. Either they're being just random or they're being extremely discerning and they're choosing on a daily basis what part of the AI trade they want to be in. When it comes to the alternative universe, how is that expressing itself?
Yeah, I think it's always important to take into context where we've been. We're 3 years into this cycle, and usually the way that you see tech disruption cycles play out, the infrastructure is built first, whether that's physical or digital, and the application or the integration of that technology into the real world economy comes second. We saw that with the internet. We saw internet beget cloud, cloud beget all of these different applications that we use on a day-to-day basis. So what we're seeing within the alternative and private market universe is kind of twofold. You have folks that are focused on the bottlenecks, whether it's compute-oriented bottlenecks or which really exists within the VC and growth space, or within the power bottlenecks, and that exists within infrastructure and the amount of infrastructure spending that we're seeing on the private side. I think we talk a lot about public utilities and how much that has benefited from a step function higher in earnings growth, but we've also seen a very similar earnings growth profile within the private infrastructure players to assess those power bottlenecks and the energy bottlenecks, transmission, the issues with transmission within the United States, but also globally. But then on the flip side of it, when we think about what this next phase is going to look like, the integration of artificial intelligence into real businesses outside of just technology, and to think about financial services businesses, industrial businesses, HVAC businesses, manufacturing, that's where I think the private markets are really going to start to benefit, because private equity is a bigger representation of the real economy than the public markets are. So if you start to see any kind of profitability and productivity boost from the integration of AI, private equity will benefit from that.
Is private equity then looking to a golden time fairly soon where there'll be lots of exits, lots of deal making and lots of profits?
Yeah, look, the capital market activity that we've seen so far this year, that we've obviously heard in bank earnings on the public side, has been extraordinarily strong. And what we're seeing is twofold in terms of capital market activity. One, this AI, it's not just AI-led, but we've seen this massive increase in IPO activity and M&A activity. 2026 is actually on pace to be the largest year in terms of capital market activity that we've seen over the past 10 years, and could even beat what we saw in 2021. So what that means is that we're likely going to see an pickup in distributions on the buyout side, usually related to M&A activity, and a massive pickup in distributions within VC and growth, because for the most part, if you look historically, about 70% of IPO activity is usually VC backed. So that pickup in distribution is something that is going to be very welcome for an industry that has been starved of distributions over the past 10 years. But on the flip side of it, in terms of where that step function higher is going to be from an earnings growth perspective, the application layer is really where we're starting to see a lot more activity within the private market ecosystem, specifically within VC growth. When you think about vertical AI applications, a little bit in terms of the horizontal AI application layer, but that application layer is where we're starting to see the next phase of this go, outside of just the distributions that are coming.
It's hard to talk about all of the areas that you cover, right? Because you're basically all of the alternative investing universe. But if you were to pick one or two areas that are very hot now, or that investors are really interested in, or where there's amazing and extraordinary opportunity, what areas would you focus on?
Yeah, I think the challenge always within the private market and alternative ecosystem is that you have 7 or 8 different asset classes that are looped within one. So we always try to ground ourselves in putting it into the portfolio context. And I think right now what we've seen in terms of our own conversation with clients is that portfolios have been positioned for a period of time of, low inflation, lower rates, and, higher than expected economic growth, because that's been the macro environment that we've been in over the past 10 years, save what happened post-2022. Now we're in a period of time where we'll see what ends up happening with inflation, but this rolling inflation shocks is likely going to persist for the foreseeable future. So this increase in inflation volatility will lead to an increase in rate volatility, which means that the correlation between stocks and bonds have flipped positive, and we expect that to continue over the long run. So the role that alternatives play when you think about infrastructure is where we're leaning into, because clients have been underallocated, especially on the retail side. Our family office survey, only 1% of family office asset allocation is catered towards infrastructure. We think that's underallocated, primarily because infrastructure gives you inflation resilient income backed by multi-year cash flows that are backed by secular themes related to the artificial intelligence rollout, but also electrification and reindustrialization of society.
So the move higher in the yield curve, and granted, historically speaking, it's not a massive move, but from where we've been, right, even 10 basis points is a big deal when you're talking about, allocating and portfolios and so on. Has it affected what investors are doing?
I think that there's a couple of things. The first part is this understanding that the cost of capital and the cost of financing has been like a step function increase. So when you think about the alternatives landscape, the hurdle rate is a little bit higher in terms of thinking about what that means for ultimate return generation within private equity. Obviously, when you think about return generation there, you can no longer just lean on leverage or anything along those lines to generate those returns. Those returns have to come from operational value creation. From a portfolio context, the volatility that we've seen within rates, obviously core fixed income has a role to play within client portfolios, but what we have seen is this continuation of the theme of reimagining what the 40 is. It used to be, well, bonds are giving me not a lot when we were in a low rate environment, so I need to search for carry. And now the shift is, okay, well, we're in a different rate environment. I'm getting carry in different places, but now I need to figure out what carry is still going to be there when I take the inflation adjustments out of it. And that's where not just infrastructure, but real estate is coming into play too, and asset-backed finance as well. Private credit has been in the headlines earlier this year, not so much anymore, because the fundamentals have been okay, and it's been robust.
The whole narrative of cockroaches went away, right? And maybe it'll reemerge, but it certainly hasn't, and we didn't see anything in bank earnings that would suggest that there's something on the way. Sitara, we do have to leave it there, but thank you so much for joining us. That is Sitara Sundar of JPMorgan Private Bank. Now to other top stories trending on the terminal this morning. Iran's lead negotiator defends diplomatic efforts to end the war. In an interview on Iranian state TV, he said negotiation is not the same as compromise and that Iran has to create a synergy between military and diplomatic approaches. Uber has agreed to buy German food delivery company Delivery Hero in a deal valuing the company at almost $15 billion. The deal marks a sizable expansion for Uber in Asia, Latin America and the Middle East. The transaction is pending regulatory approval. Extreme weather hits the U.S. In New York City and across the Midwest, wildfire smoke from Canada is degrading air quality and turning the sun into a hazy yellowish orb. Air quality alerts are in effect across parts of the Midwest and Northeast. People with heart disease, asthma and other respiratory conditions are most at risk. Coming up, Wall Street's record second quarter. We'll recap the results with Saul Martinez of HSBC next. This is Bloomberg.
I just think we're in a very healthy, active, exuberant market with very high prices and very high volumes. We benefit from that. We just don't know how long it will continue. Could it get a lot better than this? It can get better, but how much better? I don't know.
JPMorgan CEO Jamie Dimon speaking earlier this week on the bank's earnings call. For more on Wall Street's solid, to say the least, second quarter results, Saul Martinez, head of US Financials Research at HSBC, joins us now. And Saul, you were on with us before all the earnings, and I mean, we couldn't really have had a better quarter, right? Jamie Dimon expressing doubt maybe that this can continue, but why wouldn't it? Volatility is not going away anytime soon, as far as I can see.
Yeah, I think that's a fair point. I think the question right now is the durability. I mean, these were exceptional results, especially in the capital markets businesses. You just have a confluence of different factors that are driving this, that are all pushing in the same direction, in a positive direction. Asset prices are higher. You've seen demand for financing, prime brokerage. Asia has been exceptional. The AI trade has been a big driver. You've had a lot of IPO and debt issuances this quarter, a lot of advisory activity. The traditional banking business is also doing well, Vonnie. Loan growth is good, credit is good. So it's not clear. I think for a lot of us, we look at these results and we say, wow, can it really get better than this? But there aren't a lot of in the absence of a market correction, a significant one, and or economic weakness, it's not clear that there's anything that's near us that is going to derail this train. So I do think there's a risk of complacency always with when you have results like this. But again, you look at the backdrop and it doesn't seem like there's anything that's really going to derail this train at this point.
Yeah, there were very few cracks. I mean, even sort of the traditional concerns, the cockroaches and so on, they're not materializing. And the economy is resilient, inflation is going down, maybe rates going up. Is that something that could trouble the banks at some point?
Yeah, I think if you had, if you had to look at what could be negative, one is potentially some pressure on funding cost and deposit cost. You've had a little bit, for the most part, the results have been good. The funding costs haven't really pressured net interest income. There was, with the exception being Wells Fargo, where where you did have a little bit of pressure on deposit costs, and their financial margins were a little lower than people had hoped for. It wasn't a bad result, but I think that was a bit of an issue. And if you do see higher rates pressuring funding costs, and you see more depositors, whether it be commercial depositors or consumers, searching for yield, that could pressure deposits, could pressure net interest income growth in the back end of the year and into next year. And that would be something to look out for. And then I guess the other thing that could derail things is just the bar is much higher, Bonnie. It's just they've been exceeding a higher and higher bar, but you do get much tougher comps going forward when you have these kinds of results. So exceeding a much higher number is estimates and expectations go up, does get harder going forward.
True, and that is sort of the case for all of the sectors at the moment, particularly the AI trade, Saul, right? So it's not just the banks. Wells Fargo was your top pick. Is it still your top pick? I mean, investors certainly aren't rewarding some of these banks the way they are other companies that beat and raise the way these banks are.
It is. I mean, it is. I mean, the stock reacted a bit negatively on the results and sort of rebounded yesterday. When I look at Wells Fargo, I do think that there's too much focus on the financial margin and not enough focus on the revenue growth and on the net interest income growth. And they are growing net interest income. They're growing fee income very effectively. They're managing costs effectively. I think the results improve into the second half of the year, and and the stock, the valuation is at a bit of a discount to their peers. So I think the setup looks better for them, and I think you saw a bit of a reflection of that yesterday with the stock, coming back. So it is still our top pick, but we like the group broadly. We like the regional banks here. PNC had good numbers as well. So it is, we're generally constructive, but Wells Fargo would be our preferred choice at this point.
Saul, does Citi have a problem? I mean, the turnaround efforts, Jane Fraser's performance, investors don't seem to be loving it. And at the same time, it's continuing apace.
Yeah. Well, I think you have to look at it in context, though, too. The bar was very high. I mean, this stock has outperformed the market by a vast amount over the last year, over the last few years. And it went from trading at a pretty substantial discount to most peers to trading on par with peers. So you do have a much, much higher bar for Citi than you have had in the past. I think the issue here wasn't necessarily the fundamentals being bad. This was a really good quarter. It was that they didn't raise their full year profitability target. So, they did, they have an 11% ROTCE guidance for the year. They did 13% in the first half. That implies that the second half is going to be much lower. And I didn't think they did effectively I don't think they effectively communicated whether that not raising guidance was conservatism or whether there's an issue. And I don't think there's an issue. I think what they're doing is they're taking advantage of the strong results and investing for growth, sort of front loading some of the investments they talked about at their investor day a couple months ago. And that will hit, those costs in the second half are going to hit the results a little bit potentially. But at the same time, that does position them well to maintain what has been really good business momentum over the last, call it.
Well, another quarter in the books for sure for the bank. Saul, thank you so much. Saul Martinez of HSBC after a whopping week. Coming up, we're going to get you set up for your trading day. This is Bloomberg. This is Bloomberg Brief. I'm Vonnie Quinn in New York, and now a look at what's ahead today. Earnings on deck. We just got earnings from United. Stock is up 4% in the pre-market after it widened its guidance. GE also coming before the bell, and then we get Netflix after the market close. Plus, we get Fed Speak today from Laurie Logan, Jeffrey Schmidt, and Philip Jefferson. And then President Trump will address the nation tonight at 9 p.m. New York time. This is your macro picture going into your Thursday session. Nasdaq 100 futures pointed lower. We do have the 2-year yield up almost 2 basis points, but down generally at 415. Brent crude holding on around the $85 mark. That's it for Bloomberg Brief. Surveillance is next.